Why forbearance program changed the housing market? When the pandemic hit in 2020, many experts thought the housing market would crash. They feared job loss, economic uncertainty would lead to a wave of foreclosure similar to what the housing bubble burst about a decade ago, or more than a decade ago. Thankfully, the forbearance program changed that. It provided much relief for the homeowners so that a foreclosure crisis would not happen again. Here's why forbearance worked. Forbearance enabled nearly 5 million homeowners to get back on their feet in a time when having the security and protection of a home was more important than ever. Those in need were able to work with their banks and lenders to stay in their homes rather than go into foreclosure. The MBA, Mortgage Bankers Association, noted most borrowers exiting forbearance are moving into either a loan modification, payment deferral, or a combination of the two workout options. As the graph below shows, with modification, deferral, and workout options in the place, 4 out of every 5 homeowners in forbearance are either paid in full or are exiting with a plan. They're able to stay in their homes. And what does that mean for the housing market? Since so many people can stay in their homes and work out alternative options, there won't be a wave of foreclosures coming to the market. And while rising slightly since the foreclosure moratorium was lifted this year, foreclosures today are still nowhere near the levels seen in the housing crisis. Forbearance wasn't the only game changer though. Lending standards have improved significantly since the housing bubble burst, and that's one more thing keeping foreclosure filings low. Today's borrowers are much more qualified to pay their home loans, and while the majority of the homeowners are exiting the forbearance program with a plan, for those who still need to make a change due to financial hardship or other challenges, today's record level of equity is giving them the opportunity to sell their houses and avoid a foreclosure altogether. So homeowners have options they just didn't have in the housing crisis back then, when so many people owed more than their mortgages than the homes were worth. Thanks to the equity and the current undersupply of homes on the market, homeowners can sell their houses, make a move, and not have to go through the foreclosure process. Housing market crash in 2008. The chief economist with Moody's analyst states that there's some excess savings out there, over $2 trillion worth. There are people that have ownership of those homes right now that even in a downturn, they'd still likely be able to pay that mortgage and won't have to hand over the keys. And there won't be a lot of those distressed sales that happened in the 2008 crisis. Bottom line, the forbearance program was a game changer for the homeowners in need. It's one of the big reasons why we won't see a wave of foreclosures coming to the market. So if you have any questions, feel free to reach out and I would be glad to help answer those questions. Thanks for watching. Please like and subscribe my channel and my page. Thank you.